Hi, everyone. This is Jason Beck of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I've been following her work for a little over 6 months now over on X. Amazing insights into a lot of different companies and a lot of different industries. The way she gathers intelligence, there's copies of emails, there's late-night text messages from managers. It's very, very impressive the way she sources her data. Basically, the exact opposite of the Bureau of Labor Statistics. She has been working in the field for HR and jobs, hirings, and firings for over 20 years. I think she worked for Fortune 500 companies. Her current company, she's a workforce intelligence analyst. She tweets at the Job Chick on X. Amanda Goodall, thank you so much for joining me today.
Hi, Jason. Thanks for having me. This is great.
So we're recording this interview on Wednesday, August 27th, 2025. Could you briefly, before we maybe start talking about some of the data that you're collecting for the technology companies, the jobs being lost, if we're actually in an official recession, if the government's going to admit that, how do you actually source some of this information? Because literally you're getting copies of emails from managers at Google and Meta and some of the other major technology companies. How are you able to get access to this information ahead of Wall Street and the government?
Yeah, it's weird how things have just changed over the last year, I would say. Everybody wants to share their story. And, everything that I've always done with workforce intelligence has been through official documentation, not so much the BLS, but, what companies are saying, what their PR, looking at the workforce data as well. That's what I've done for 20 years. So, I analyze it all that way, but now everybody wants to talk about it. Now they are just voluntarily sending me stuff, just going, did you see this? Oh, I want to send you this. I want to send you this. And it's not that I asked for it. A lot of people think I'm a journalist. I'm not. I write, but I'm not a journalist, to fit the definition like that. So people just send me things and let me know. Now, obviously, I take all of it with a grain of sand. It's one of those things that you're like, well, is this real? Is this just made up? Are they trying to push a narrative? Are they trying to get their boss in trouble? Whatever. So, when I see stuff that people send me, and I get just tons of pieces, probably hundreds of pieces every single week. And, I don't publish most of it. I don't publish most images or anything like that. I don't want to get anybody in trouble. But I look at the data, and when I see something that I know is correct, and I can just do some quick pulls of information and just what I know, then I start digging, and then I go down that rabbit hole and try to figure out what is actually going on. And everything that I do with workforce intelligence is really, to serve my clients, whether they're corporate, legal, or investors. They want to know what's coming. They know what already happened, and they don't really necessarily want that context or that analysis of why it happened. Sometimes legal does, obviously, but for the most part, they want to predict what's going on, to project where they can go, what they can do, and to almost be prepared, especially legal, okay, we need to make sure we're good on all of these things. So I do look at jobs. I do look at, hiring, the exits, no matter whether they're layoffs or just attrition, whatever it happens to be, because we do see a lot of org changes and things like that. But you have to look at all of that and just really try to go, what's the truth? What is going on? Where's the trend line? And, you can look at it. Honestly, most people look at it whether as a whole, just as jobs as a whole, or they look at it by industry. Honestly, until you dig into the company data, you do not see it. That's what you have to do. You almost have to go company by company and then bring it into industry, and then you can look at it as a whole. And that's where you get your numbers.
And for listeners who are not familiar, Amanda was warning people over a month ago about Microsoft and Meta, Google, that these companies, even though the headlines over the last 6 to 12 months that they were spending tens of billions, that their projected capital expenditure budgets were, for some of them, $80 billion for 2025 on artificial intelligence data centers, that they were actually firing a lot of, what was it, six-figure computer programmers. These were not entry-level jobs, or they weren't even hiring entry-level. They were firing managers. These were people that had no warning, right?
That's correct. Yeah. I mean, I've been looking at all of that. I mean, that's what I do, and I try to go anywhere from 3 to 6 months out. Sometimes it's harder to go that nitty gritty. But usually, for, my clients that, share their portfolio, that we work on different reports, I usually can give them a 30, 60 day heads up. And that can make all the difference, especially for investors, when you're dealing with it. And the market doesn't always tank or increase, depending on what's going on. It just depends on the whole scenario, how the PR spin is made and things like that. But for anybody looking, and even people looking for a job, for companies that are trying to figure out what their competitors are doing, this is important to know. I called the Chevron one last year. They laid off 9,000 this year, right? It's still messy out there. The Microsoft stuff I've been talking about since I think last December. And, you can see it. It was all there. It's all there in the data. Just nobody wants to talk about it, or they just think you're crazy because I put it out there and they're just like, yeah, that's not happening. I'm just like,
Well,
wait.
actually, as an investment analyst that covers publicly traded companies now for over a decade, I could tell you, Amanda, and I'm sure you're aware of this, that normally when a lot of these companies announce that they're firing a lot, sometimes the stock price will actually, the investors will like it, be like, okay, the management is focusing on cutting costs. So even though it hurts like the real economy, it hurts, someone who is making a high paying job, they're probably not going to be able to get, at least for a while, the same high paying job, or if they can ever get it. But the investors, the stock price normally is not upset with management, cutting costs and firing a bunch of people.
Exactly, and that's what my clients love. They're just like, okay, no matter what their game is, what are they doing? I don't provide them complete advice on it. I go, here's the report. Here's what's happening. Go do you. And yeah, sometimes they win, sometimes they lose, and it just depends. Every company is different, and it's who's managing the company, what board is behind it, what activist is behind it. And the really savvy investors know their stuff. They just want this this integral data that can get really granular, and that's what I focus on.
So for artificial intelligence software, a lot of these companies, whether it's Fortune 500 companies that are not like big tech companies like Microsoft, they're still spending a lot on artificial intelligence software. There's the headline articles, and you posted a study from Stanford University saying there's going to be a lot of job losses, which industries. Would you say that as of now, at least for the foreseeable future, that artificial intelligence software, robotics, automation will not it will not be a net creator of jobs?
I think AI is an interesting one. A lot of companies, especially the big tech ones, are using AI. They're using it as an excuse. It's not what I'm seeing fully. And also, I'm also seeing companies that are not talking about AI, like FedEx, for example, and they just laid off people, today. In fact, they just mentioned that today. When you look at the workforce data, they are focusing on AI heavily. So, you do have to look at all the different areas and the classifications and what does AI mean? Especially when you're looking at like the press releases and just their spokespeople talking. Everybody uses AI, and I I actually hate the word AI, which is really funny. I love the technology. I think it's incredible. But it's kind of like going, "Hey, I use internet." To me, it's it's I have electricity, I have internet, I have AI. Okay, cool. Okay, you're building a new technology. You're restructuring something else to do cooler things with your programs, whatever. The phrase AI is weird, but so it really just depends on how companies are utilizing it and what it actually means. To say, oh, we're going to cut back on, this team or reduce this org because we're focusing on AI. What does that mean? What does that mean? And, companies are, they're not transparent enough to, to really go into all of that. So it leaves everybody just sitting there going, what are they actually doing? And that's what I love digging into all this stuff, because you can really find out a lot more details when you start seeing everything. And that's where you can start seeing what their future is. Companies are not making decisions last week to fire people. They're not making decisions today to go, oh, this is what we're going to do, next month. They're years out. They're 18 plus months out at least. So, to look at what AI is doing for jobs, for hiring, for things like that, it's a word I want you to ignore. Forget the phrase AI. Look at what they're actually doing and see, where you can plug in on getting the data for all of that.
Well, the data centers are still getting built. A lot of them haven't even been built yet. So they just committed the capital expenditure, the billions of dollars, to starting to build out these next generation data centers. But what I've seen is there's a ton of these stories. A lot of these college graduates that graduated at the top of their class, maybe they got a full-time, or not a full-time, but a paid internship at the top of their class for computer programming. They didn't get offered a full-time job by these tech companies that they would have gotten in the past. So it looks to me like the old, learn to code. People should learn to code. People are going to get a six-figure job for computer programming. That looks like an industry that that six-figure job, people can't count on that.
That is true, and I just want to take a minute to just rant just a minute about all of this. And everybody says, "Oh, don't learn to code." Well, that doesn't mean don't go into tech, right? That doesn't mean not look at what's in the future. What other areas are there? Because somebody's building AI. AI is not building AI. Humans are still building it. So, I hate seeing the argument. It just, and also I hate seeing the argument of like, oh, don't learn to code anymore because this is happening. Go learn a trade. Well, you know what? AI is jumping into that one too. At the end of the day, we still have to understand tech, and again, this kind of brings it down to the AI and coding and all the phrases people use, and they just interject things. And so yeah, no, technology is still really, really, really important. Somebody's going to run those data centers. Somebody's going to build the AI. Somebody has to build that next technology. Let it be you. And I say that to anybody that's looking for a job right now that's in technology. Any of the grad students, no, this is good. Just know what's going on, and really like chase it.
Well, it looks like AI is causing deflation. So the software is improving, the quality is improving, the costs are falling, especially for artificial intelligence video. So if you're a business in another industry, and you mentioned FedEx, but I mean, there's a ton of other businesses in other industries that can take that software and let's say a database or find like big data analytics or a legal business, they can adopt that software learning language model or something smaller and more customized from an open source artificial intelligence software learning language model, then that would benefit them. That would allow them to cut their costs, their overhead, maybe increase profits and profit margins. So I could see it like over the future as more businesses adapt to it, it'll be more efficient. But right now it looks like it's going to cause a lot of job losses for those six-figure white collar jobs that people weren't expecting.
That is very true. Yeah. We are going to see, we're going to see a lot of ebb and flow with all of this right now. And we already have, Klarna, something that I've looked into, they're like, oh, hey, we don't need to hire people. We have AI, and then they went, oh, wait, we need to hire people because people don't like talking to, bots for customer support. Hi, I could have told them that, and I wouldn't have charged them as much as McKinsey. But it's like it's going to be interesting to watch how companies, whether they're big corporates or they're smaller companies, utilize AI to grow, to evolve, and how they realize, oh, this isn't working. We need to step back, and now they hire more humans again. And I think for the next, 5, 10 years, we are going to see that. It's good. There's going to be a lot of changes. Right now, we're in the big slump where a lot of people got laid off because AI is the cool shiny thing that everybody's chasing right now, and companies are going after that technology. It's a race. It's a race right now, and I really feel like we're just creating a racing dynamic. All the tech companies, and good or bad, it's what it is. Companies are scaling margins instead of teams right now. That's the name of the game.
And those customer service bots you talked about, I mean, I've read articles where people have figured out how to game them, how to trick them into
Mm,
getting like free vacations and stuff like that. So there's a lot of bugs in that thing. There's still
yeah.
bugs in ChatGPT. I mean, I do like economic cartoons memes with it. There's still an enormous amount of bugs. Some of the images take me over 24 hours to 2 or 3 days to work out. So there's still a lot of bugs that need to be worked out. Now, in terms of job losses, the government, I don't think the U.S. federal government here in Washington, D.C., the Bureau of Labor Statistics, Trump just replaced the head of the BLS and said it was a agency, it was a political appointee from the last administration. Do you see signs that we're already in a recession? And do you think the government will actually admit we're in a recession?
Never. They'll never admit that. And I don't think any president wants to admit that, whether they just came in or it's their fault or whoever. This is something that's been coming for a while. We're kind of in a perfect storm right now. With regards to the BLS, and if we're in a recession, we know what the jobs look like. And, I'm not an economic expert with all of this, but dealing with what I deal with on the job side, yeah, have we been in a recession? Yeah, I'd say probably since May of 2024. And are they going to call it? I seriously doubt it. I seriously doubt it. But we have constantly seen jobs decrease, and labor participation is decreasing, and we have a lot of issues going on right now with regards to this, and it really just kind of blows my mind sometimes to see any party, either side right now, talking about how great and how strong the labor market is. I'm like, hi, I can show you some workforce data that suggests otherwise. Let me introduce you to all these people that don't have jobs, that haven't had jobs for years. So the BLS thing, claiming it was rigged data. whatever, if there was incompetence, I totally understand the firing. But if it was just due to the really bad way we survey to get unemployment data and things like that, then, fair, that's just a really bad method. And, I don't know the full methods they use, the full modeling they use, but it's not accurate. I don't believe it's been accurate probably for the last 20 plus years, to be honest. But what's happening today, now we see this. Now we have media talking about it. Now we have people that are been out of work for so long realizing, wait a minute, that's not it. When you have this many people, especially on X, the community on X, that many people just going, no, this is my story. This is my story. It's always the same. Then it's worse off. So, take the BLS numbers, take unemployment numbers if you want to, and make that your, baseline of what's happening, and just know that it's probably worse.
Since you track a lot of consumer industries, a lot of different industries, source data and intelligence, are there industries that are actually hiring many, many thousands of jobs like some of the jobs data claim?
Many, many thousands? Absolutely not. Accenture, maybe. No, not in the thousands. Not anymore. That just doesn't happen. You see, and I think a lot of people actually believe that corporations are hiring thousands like every day. We see all these job listings out there, right? So they're just like, well, assuming, oh, they're hiring. Apple has 600 plus, jobs available on their career sites. That's not necessarily all for the US, not necessarily all for one industry. But I think just mentally, that's what we see that number, which is like, oh, wow, they're massively hiring. This is great. And, companies don't massively hire anymore. It's been a long time since they did, and really, I don't think it was ever that crazy on numbers, except when they were like massively growing, like when Nvidia grew a couple years ago. That was a big growth pattern. It wasn't all in the U.S. either. So by looking at all the different data and between the different companies and everything like that, as I said, you really have to kind of look at it from a company standpoint on who's hiring and who's hiring the most. And I would say right now, the biggest churn is either in tech or finance. That's what I'm still seeing. And that's been the case for the last several years anyway, at least since the pandemic. We're always going to see a churn in finance as well. So you probably know that, with your background as well, just kind of what goes on with it all. But interesting things just happening behind the scenes with it all.
And then you have a lot of firings or stopping drilling, spending capital for the oil and natural gas companies. You mentioned Chevron. So a lot of the larger companies that have done a lot of acquisitions like ExxonMobil or Chevron, normally what happens when these companies do a large acquisition, they start firing because there's redundancies. There's two accounting departments after the huge merger. They don't need two accounting departments. So the average person isn't aware of this, but when the industry is not spending capital expenditure, say for drilling, if the oil prices are low or stuck in a trading range, and there's just not the economic incentive for the oil companies then to spend a lot of capital for drilling, and the drilling normally is what creates more jobs.
Yeah. No, there's a lot going on with oil and gas right now, as you mentioned. The Chevron thing was a big one, and that really kind of started the kickoff, honestly, for 2025 and how bad it is. I mean, I don't remember if it was December or January. I finally, modeled out the numbers, and I said it's probably going to be close to 40 to 50,000 layoffs within oil and gas and their adjacent industries that it would touch on. And I think we're pretty close to that number. We've got Halliburton and ConocoPhillips coming up. I actually just spoke to somebody that's a consultant at Halliburton the other day, and they were just like, how do you have your data so accurate? I'm like, how do you know that? Do you work for us? I'm like, no. So there's a lot of things happening with it all. And like I said, the adjacent industries and all of the side services, nobody thinks about that. When you're talking about all there's 9,000 people getting laid off from Chevron. Well, look at all the side services that are also going to get hit. And that's the true impact of what a layoff actually does.
Especially if they don't spend the capital expenditure on maintaining the oil production or drilling, trying to grow production. So if they cut that budget enormously, I mean, that's directly into the amount of jobs. And because there's just not going to be as many drill rigs and as many humans needed to drive the trucks or set up oil pipelines, all the different oil service jobs that you mentioned. Now, you talked about applying to jobs, artificial intelligence, and you've talked about this because you have an HR background, is artificial intelligence and these bot programs that people can program, is it really screwing up like the job market and applying to jobs right now?
Yeah. Quick thing. I actually don't have a background in HR. I'm not a fan of HR, to be honest. But what is going on with AI is basically, everybody's doing these AI resumes. Companies have all of these ATS systems, and everything's all about agentic AI. If you go to like HR conferences, which I have been, that they just talk about it like it's like God. It's amazing. It's actually just like I just sit there and listening to the panels, going, "Oh my gosh!" But we have all these issues that are going on. So you're literally going, you're any job seeker is literally fighting AI versus AI to get a job, and they're wondering what's going on, and companies are wondering why they can't find qualified hires. It's just all messed up, and to watch it happening, and to see these companies promoting this, oh, apply like this, and to have companies just say, oh no, this is how we're going to deal with their resumes, even if they're AI resumes. Just to watch it all is, it's actually just insane, and it just makes you just go, can we just stop, throw it all out, hit reset, and start again? It's almost to the point where you want to just go, can we just go back to the days where you walked in and handed somebody a resume and shook their hand and you had to interview? It just seems to make things so much easier. It's wild. It's
It's
really
sad.
wild.
It sounds like
Mhm.
a ton of spam. I mean, I
It
think we were
is.
talking about some stories on LinkedIn where someone posted an HR professional that sent you some information, sent you something that they posted a job posting on LinkedIn, and in 24 48 hours there was tens of thousands of job applications, but they're all like spam applications that had nothing to do with the job. They got a notification from LinkedIn saying they couldn't look at any more of the resumes, or they were going to have to get charged. So the whole thing was just big and bloated and
Yeah.
wasteful from all the spam resumes. So someone who actually would have qualified for the job wouldn't have even been able to apply it, and no human being was even going to be able to read their resume, from what it sounds like.
Yeah, you're invisible when this is happening. And LinkedIn, Indeed, and any of the other AI systems that were well, just programs and companies that are out there where you can just apply online. It's about making money. That's how they make money. They charge for for you listing a job, right? And it's crazy to see how much money actually companies spend on job boards. And at the end of the day, and for all the people that are just like, oh, they're just doing this to take my data and have it, and stuff like that. I don't think so. I don't believe it's at that level, but it is frustrating to watch companies waste money unknowingly. Many times when I've spoken to some of my past clients, they didn't realize what was actually going on in HR. They didn't even realize their own numbers of headcount and the way functions looked. For when people like me go through it, and go, this is actually what's happening. Company CEOs were just like, I'm sorry, what? And so when you dive into all of that, and this is probably a little bit of my pet peeve with HR, they're not all business leaders. I know a lot of them really want to sit at the table, this whole CHRO thing and CPOs, whatever. They want to sit at the table, but they're just, most of them, I will say that most of them are just don't have that kind of background to run a corporation. And you do have to be able to run both sides. And I believe, overall, just from my experience, and this is 15, 20 years of actually dealing with executives on their career path, which was kind of what got me into what I do now. Seeing what goes on behind the scenes, they have no idea what's going on in HR, and there's no talking channel. So companies just they spend on jobs, and they bring in people. It's not right, and the churn is increasing. It's been increasing over the last several years, and nothing is getting addressed for that. And it makes you kind of, some days I sit there, number one, some days I'm angry, some days I'm kind of conspiracy, just going, maybe they don't want anybody, maybe they have another plan, so they don't need humans. I have my moments, especially when I'm going through different data points and stuff, but I don't know, it's just there's so much disconnect in corporations these days. And I've looked at a lot of corporations over the years and just read a lot of the history of it, and I don't know what happened. And I'm actually working on something to try to figure that out. Like, where did it all break? you
Well,
know?
they always want to
But
cut costs, right? So they got rid of
yeah.
the defined benefit retirement plans, the days of someone, working for one company and the company
Oh,
being loyal to them and them getting taken care of in retirement after they work there 20, 30, 40 years. Those days are over. The trend that's been going on, Amanda, for a very, very long time is with these HBN1s, offshoring, because what the employment costs, the salaries are what, at least 30% less or something like that. So all, whether it's Elon Musk or Vivek Ramaswamy or a lot of these other tech guys, they're all pro immigration, but mostly what, because they want cheaper salaried employees.
yeah. 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 The whole H-1B thing is, looking into all the data, and I just finished a workforce series on my Substack for all of this, but, and looked at the Mag 7 specifically. The H-1B visas is a big distraction. Honestly, it's a distraction on what's happening with offshoring and nearshoring overall with companies. It is, and this is kind of where, I kind of developed the whole phrase of this is a corporate revolution. It's not the people rising up at this point, it's the corporates rising up and revolting. And it's not to give them street cred or make them noble for what they're doing, but we are seeing this big mass restructuring, mass automating, mass offshoring on a scale that is reshaping society. And, it's a bit terrifying to look at. And again, this kind of ties back into what job seekers are feeling and why I don't believe the unemployment rate is what the BLS says it is. And I don't think many people do, but we have so many compounding layers to add to everything that's what just boggles my mind some days. And I think everybody feels what they feel in their own corner of the world, and depending on what industry they're in, and they see all these things, but we can't all be crazy. Right?
Well, if you use the old data from the 1980s and 1990s survey data, John Williams of Shadow Government Statistics, he has it closer to around 30%. So the
Yeah.
government stops counting people who stopped applying to jobs, after 12 months or something like that. They're not even counted. So I guess it depends on the industry. But overall, I mean, I don't see a lot of headlines, Amanda, that are saying for a lot of companies, a lot of industries saying we're looking to hire thousands upon thousands of people. I mean, it's just pretty rare.
Yeah, it doesn't exist anymore. And yeah, the average unemployment time period right now is 24 weeks. At 27 weeks, you're not counted in the data anymore. You're long-term unemployed. So that's been increasing. So like, and well, I guess the unemployment time period has been unincreasing. And then we're also seeing just the unemployment rate. So when you fall off, you're not counted anymore. If you're driving Uber, you're not counted anymore. It's really frustrating. So yeah, I don't really look at much of the statistics for that. Just it's not been something I've needed to do with what I work on. But is it 20-30%? I wouldn't doubt it some days, and definitely heavier in certain industries, certain regions, and things like that. And I do believe it's going to increase. Whatever the unemployment rate does happen to be, we are going to see it increase because, at least for the US, for US American workers, because we are seeing so much offshoring happening right now. This is why we're not finding jobs. Straight up, looking at the numbers, I'm blown away.
And I also think the government economic data doesn't count underemployed, because I know a lot of people here in the
Mm-hmm.
metro area here, and I have friends in New York City area and others who are working 2 or 3 part-time jobs trying to make a living together to make
Yeah,
ends meet.
exactly. Exactly. Yeah.
So for your company, you cover the consumer, you track the consumer and consumer spending. Are we seeing recession, or are we seeing only people that are benefiting from higher asset prices, stock prices, crypto? Or what are they spending on, and what is the consumer cutting back on based on your data and intelligence?
They spend on DoorDash. I actually, so my company is the Job Chick, but I also advise different startups and businesses, and have done for the last 20 years. And I'm currently, since 2018, I've been advising a consumer credit company. And so I get to see all the data. And I originally started in there just, to kind of help them deal with people and what's going on, and how to just kind of more of the customer service side. But, in that, I've learned all this stuff and seen what's going on. So for the past several years, people are just spending. The amount of consumer debt is insane. And, what I would say, we're seeing heavy revolving credit accounts, which are all your credit cards, your store cards. They were massive right after the pandemic. Massive, massive, massive. And they just imploded within a year. Like people were just overextended and not paying, because that's pretty much where we can tie up where layoffs really started ramping up, especially because, when you're talking like, late 2022, early 2023, when all of the overhiring that happened during the pandemic really started taking place, right? So then everybody got laid off. Nobody's paying their bills anymore.
Yeah, that was pre-AI, so
Yeah.
they were just like,
Yeah.
"Oh, we're gonna reopen the economy."
Yeah.
We didn't know what AI was per se yet, because like 2022, 2023 was when it really started coming on the scene with the share price and Nvidia. So that was like the transition from reopening the economy post-pandemic to AI.
Yeah, yeah. So, overall, the consumer, from what we're seeing and what we're seeing today, still, they just absolutely disregarded their credit. And they're just like, it'll get better. I'll find a job. Well, here we are. Mid 2025. I mean, a lot of people are still struggling to find jobs. I mean, I speak to people that have been out of work for over a year. And it's not that they're not qualified. I've spoken to some of the most talented people I've ever spoken to, and they're struggling to find jobs. And it can be due to just applying wrong industries, AI, whatever you want to name it, companies offshoring. It doesn't matter. The situation still exists. So, it's interesting to watch. We are seeing bankruptcies increase. I just heard from my friend Lakshmi at Unicus Research. She actually just mentioned today that more people are filing 13 over 7, which is wild. Is it just due to how much debt you're in, or the fact that you need to keep your house and your car and everything like that? I don't know what all the breakdown is of it, but
Is that a type of bankruptcy filing? So it's not Chapter 11, then it's Chapter, you said 13?
13, yeah. And, companies and people are filing bankruptcy more often these days. And it's just, I don't know. It's just, it's weird to watch from the credit side, especially we had student loans hit, at the beginning of the summer, really. And people's scores dropped anywhere from, 80 to 170 points. Actually, I think the highest one I ever saw was 182. And I actually saw this on the on somebody's like credit file, and the other day I actually just saw one, and they got hit like 165 points, and it's because it's still happening, and I think that's the thing people aren't going to realize, especially when you're dealing with consumer debt and student loans and things like that. Well, even though you were 90 days beforehand, and they finally put it on credit reports, well, if you get to that point now, whenever that happens, it's going to fall into your credit reports. We're just going to keep having people added and added and added that are all in delinquency, going into default. It's just going to keep getting added to credit files. So credit files as a whole are just going to get worse and worse and worse, because we have a lot of people, millions, that are, delinquent with their student loans. When you have all of these people, and you have to look at this, and I'm going to bring this back into jobs, if you have a layoff, and maybe, after the pandemic or during the pandemic, you bought a house because we could back then, right? It's a lot easier, right?
Well, interest rates were cheap temporarily again.
Yeah,
right? So.
yeah. If you bought a house because you had deferred student loan payments so you could make your payments, and now you don't, well, your payment is now due. You now have to pay student loans. Well, do you pay your mortgage? Do you pay that? For those that are going to get wage garnished with all of this, what does that do for their housing situation if they did buy a home? There's all these issues. And if you do get laid off, you're lucky if you're at 6 months before you find a new job. And, and I think there's different things, like with the one big, beautiful bill that went on, that says you can't defer more than like 2 times in like 9 months or something like that. I can't remember all the details. But there's issues that are going to keep arising with all of this. And like I said, this is millions of people. This is not just a small thing. And, it's going to be interesting to watch over the next like 18 months. I think, I don't think we're not even at the beginning of seeing what's going on with consumer credit and debt and things like that.
Well, it's distorted. So if you didn't use a lot of debt, so if you benefited from the asset price inflation the last 10 or 15 years, and you didn't have a lot of credit card debt or student loan debt or huge mortgage debt, you're fine. It's the people that didn't have high income or just lost their job, and then they had all that debt that you said that are going to be like, maybe they were working class or middle class. They didn't have a lot of discretionary income. They were barely making ends meet. Or now that the interest rates are higher on a mortgage, because there was a good amount of people with adjustable rate mortgage, and now you said maybe they were counting on a student loan debt bailout, and now
Mhm.
there's no student loan debt bailout. Now they have to make the payments too. Now they're basically, what are they going to have to sell? Probably sell their house or their condo. They're going to have to try to liquidate it quickly for some cash, maybe.
Yeah, yeah. There's big issues afoot, and speaking to a couple, very smart people in housing, that's their thing. Yeah, looking at what's happening over the next couple months, they're really worried about, the end of the year for housing. And plus you have that whole FHA thing going on, and there's a lot of problems afoot, and and I say this to a lot of people. My thing is jobs. My thing is the workforce, but I am a part of some of the other areas, a little bit in housing, a little bit in credit, a little bit in auto, so looking at all of this, when you layer all of these issues that we have, from consumer debt to housing to layoffs and the length of time that you're being laid off, the amount of money, the salary, the wage compression that goes on, and you layer all of these things together, peel it, it's like an onion, and you're going to start crying. This is a problem. There's so many layers that we have to just keep peeling open. It is bad. It is bad news. And like I said, we're just at the beginning of it all, honestly. And it's not to say that it's necessarily going to get way worse. Let's fingers crossed, right? But I do believe there's going to be a lot of people that are going to have a really tough time. Now, conversely, you mentioned people with, not necessarily the middle class or the lower classes, but those with assets. We are seeing that side as well do just fine. People that we're making, the three, four, $500,000, salaries, plus bonuses and all that kind of stuff. Dealing with them as well. They're like, I can ride this out. So there is going to be a vast change in how split of a society we become. Just seeing that from people, just
So
talking to
more
different
wealth
people.
disparity, more
Definitely.
distortions. If I could summarize
Definitely.
what you said over the last couple of minutes, it sounds like a lot of consumers, they just don't have the discretionary income. The real economy is not creating a lot of new net high paying jobs, so six figure or more jobs right now. A lot of these companies are adapting to artificial intelligence software. The consumer in certain industries cutting back. I think Chipotle actually just shocked a lot of people because they've raised prices. What with
Yeah.
a lot of their food, the average check size was way over $20 in a lot of areas, and they said that their customer was cutting back on ordering at Chipotle. So you've seen a lot of examples of some of these consumer businesses, and then I think the home builders just said that a lot of the new home sales, and they were subsidizing the mortgages to get new
Mhm.
home sales. They said they're not even selling a lot of the new homes that they're building.
Yeah. 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 There's a lot going on. And it all comes back to jobs. It all comes back to jobs. And that's, when I start talking to people, they're just like, well, it's just jobs. You just deal with layoffs. No, I don't, because if you don't have a job, the economy doesn't run, right?
Yeah,
If
consumer can't spend. Can't go out, can't go on vacation, can't go to Las Vegas. So I know
right.
you're not far from Las Vegas.
I am
When
in
I
Las Vegas. Yes,
Yeah,
yes.
so like the stories coming out of Las Vegas are crazy. I mean, I have some friends who live there. I used to when I lived in Southern California, I used to go there like once a month. That was many, many years ago. But I mean, like I remember when my grandparents used to go there all the time, and there was budgets on the Las Vegas. There was like good value on the Las Vegas Strip. Could eat
Mhm.
a dinner buffet for like $20 at MGM Grand. That was like 25, 30 years ago. I mean, it's
Yeah.
turned into like what, five-star Michelin restaurants, $90 for a mediocre steak. Like it's just gotten ridiculous.
It's all mediocre. Most of the restaurants are mediocre. I only moved here. I've just been here, just coming up 2 years now. So I got here when it got really fun, right? But it's not as bad as the media portrays it. Yes, there's pockets of problems. But what I find interesting about Las Vegas, so most everybody thinks about Las Vegas as it's just a strip. And yes, of course, it's tourism, right? We all come here for the strip and for the lights and for the shows and for all the fun stuff and our mediocre steaks. But, it's interesting because Las Vegas as a whole doesn't have a lot of really big industries here. They don't have a lot of the big corporations here, whether it's warehousing or even just white collar jobs. It's that's not the main thing here. And I know they're trying to be a big tech hub here. I work with a lot of the startups here on all of that. Of course, obviously it's hospitality, but because Las Vegas is not a big corporate hub, compared to like, a bigger, other cities, Austin and things like that. The local economy is not feeling it. You can go out to any of the satellite casinos that are not on the strip. They're packed. They're always busy. They're always busy. So it hasn't touched the locals in Las Vegas yet. Now, once the strip closes down, that will obviously, well, not close it. It's not going to close down.
Well, boom and bust
I'm not even sure why I said that, but once it starts closing down a little bit more, because we are seeing layoffs, but once it is closing in more, I think it's a better phrase, we're going to see less and less hospitality workers here, and that tends to be the lower mid-level workers overall. Well, between that and housing and things like that, that's where the problem lies. So as a whole, Las Vegas isn't doing that bad. Tourism's down, things like that, whatever. A lot of it's coming back to consumer debt at the end of the day. I know a lot of people want to say it's tariffs and travel and Trump and things like that. I don't believe it's just that. Not from what I can see. It is just straight consumer debt. And
I agree. If there's a deal on travel, I mean, people are still looking. They're just not looking in Las Vegas. So they're looking in other areas. Yeah.
Yeah, it's expensive. It's pricey. I mean, I'm one of those weird people, my husband and I actually moved here by choice. We could live anywhere we want, but we were like, we have a few more years left in the United States. Where do we want to live? And we were like, well, when we traveled for years pre-pandemic, we always stopped in Las Vegas. We're like, hey, that's fun. I love entertainment, nightlife, and things like that. That's why I came here, for that fun side of things. So, I'm the local that does the touristy things. So I'm at the strip a lot. So I do see it. So yes, some casinos are struggling and some are doing fine. You go into the Wynn, the Bellagio, things like that. They're doing great. They're doing great. Restaurants are still busy. We see like all these like different like influencers that post these like dead casinos. I'm like, yeah, if you go at like 3 a.m., like when I come out of a club at 3 a.m., it's pretty quiet.
The casinos that are struggling, they'll either shut them down or renovate them. They'll demolish them. Yeah. They'll adapt, because the Las Vegas Strip goes through boom and bust cycles. I mean, most of the developers like Wynn and those guys, Sheldon Adelson, I mean, they've gone bankrupt, so they've had to deal with boom and bust cycles. I mean, there's different consumer preferences that have changed on the Las Vegas Strip. Like 25 years ago, the Las Vegas Strip was value. My grandparents wanted to go there all the time for good food at a reasonable price and shows. I mean, those days are over for the value side on the Las Vegas Strip.
Yeah, the biggest thing I think with the Las Vegas Strip, and this is just me seeing this kind of as an outsider, just somebody that used to travel through and now I live here, it costs a lot just to go there, just to have the benefit of going to buy that mediocre steak. You're paying $40 plus valet. Right? You're paying $20 to $30 to self-park. So you might as well valet at that point. If you're going to go spend $80, $90 on a steak, valet. Help the local economy and the people there, but it's like, it's so expensive just to get there, for the benefit of gambling or doing a show or something like that. That's the crazy part. And I don't know why, but it just, to me, it feels like Las Vegas has shot themselves in the foot with that one, and you see different places. I think Resorts World just had like free parking for locals for the summer or something. And
they'll adapt over the next couple of years, Amanda, to the consumer not spending at those levels. So they'll start remodeling parts of the casinos. They'll knock down the old ones that used to be new 10, 20, 30 years ago. So you'll see that it'll be a boom and bust cycle. It will not happen over the next like 6 months or anything. It'll be over the next like 5 years.
Definitely not. Yeah. So now they're all just bickering about, are we having the A's stadium built or not? So it's a very unique town. I will say I've lived all over the US, and this is a really, really unique area. Definitely.
So I have one more question. I kept you for almost an hour. I actually enjoyed a lot. So we'll definitely have you back on. I'm sure you're going to get offered to go on a lot of different financial podcasts, because a lot of the larger YouTube channels financial YouTube listen to my interviews. As we wrap up here, maybe tips for my listeners out there who are looking to get their resume read by a human, where it's not blocked by spam or artificial intelligence software and screened out. What should they start doing to maybe differentiate themselves if they just lost their job? Maybe because I do have a lot of tech people who listen to these podcasts at Microsoft and Google. They just lost their 6-figure computer programming job that they had for 10 or 15 years. How should they adapt and potentially find another decent high-paying job again?
Yeah, first off, know that you're not alone. I know everybody knows that all the layoffs are happening, but a lot of people are in the same boat right now. My focus when I used to work on like career paths was, more in the tech side, a lot of oil and things like that. So tech is unique. You have to, and regardless of what industry you are in, and this is going to be very generic advice overall, but tech people really need to listen to this one because you will stand out very differently. You have to, number one, don't use AI resume writers. Don't use any of those automated systems online. And honestly, it's funny because I used to say, like sub 100 jobs, use LinkedIn or Indeed. Now I'm not even going to recommend those. And it's not that, you can go search the job boards to go see what's out there to give you ideas. But these days, regardless of what salary you're looking for, if you're just looking for just something local, like working at a grocery store or something, that obviously that's not going to work. But if you are looking for a salaried role, you really need to focus on the companies that are out there. What are they doing today? What are they doing in the future? And, again, this is looking and really thinking outside the box, looking at their press releases, looking at their earnings, looking at all the little details of what they do and diving into, where they are actually going as a company. Think about who and it's not that you need to talk to people to, everybody says network, and I don't want you to necessarily network, which is kind of backwards. I understand everybody on LinkedIn, all the gurus on LinkedIn are just like, oh, network. No. Their recruiters are annoyed. They're annoyed by having all of that. But what you should do when you are looking for a job, or even when you have a job specifically, start finding out what companies are needing. Start meeting recruiters at that point. Start talking to HR at that point. Start seeing what they might need. Let them know who you are, because one day they might go, hey, we actually have this pain point. You said you could solve this stuff before. I remember you. So that's what you really need to do. You need to start standing out differently to solve companies' pain points, because at the end of the day, nobody just wants you to do the job description, and I do see that, especially with like the AI resumes and just ones that are written hard. I get it. Resumes are hard to write. It's like legalese for the career world. I've done over 25,000 of them. And, it is very, very different. But today's world is not just about, I can do these requirements. It's about, you have this problem as a company, or you guys are aiming for this thing. I can help you. I've done this before. And, and it's harder to think outside the box like that. I'm not going to lie. But, the more people you can talk to, reaching out to different people, just talk to your, past colleagues, where they're landed, what companies are they working at, or what people do they know? And see what's going on in the company. And you don't necessarily have to ask for referrals, and I know a lot of people in tech do that, but you don't have to do that. You just have to go, hey, who should I talk to here? Do you like it? What's going on? Where are the problems that you see? So you actually know what you're getting into. A lot of people, apply to companies, and I see this all too often. People will apply to a company because they have not done their homework on the company, other than reading on the local press release that, a new CEO was hired, but they don't actually know what's going on in the company. And they basically, what happens, they'll get a job, and 6, 8, 9 months later, they're on the layoff list because, the company was doing layoffs. And I see this a lot. I see this because this is what I look at. And, the last 5, 10 years, I've been monitoring this for my clients to just say, hey, this is actually what's happening. So I know you like this company, but no, don't do this to yourself. You don't want to be put in that predicament. So the more the more you can talk to people, and not just send them your resume, not just do the general networking thing like, hey, I'm looking for a job. Let me know if you know of anything. Don't do that. Don't be generic. Stand out. You have to be the obvious choice. And I think that's what most people forget. And they know they are, because there's so many talented people out there. I speak to them on a daily basis. There's so many talented people. Be the obvious choice. Yes, you might have that degree, that pedigree, or you've worked at a certain logoed company. But that's not enough these days. Just because you can do the job does not mean that you're the obvious choice. And that's what you have to do. You have to stand out as the obvious choice.
And you have to keep learning, constantly learning and adapting. So even if you're a computer programmer, you probably have to go and get your artificial intelligence certifications, which are cheap and almost free from either Google. They have the courses online, or Microsoft, or NVIDIA now. So you can go and learn those and adapt. So if you just lost your computer programming job at one of those tech companies, you can go get your certification, cybersecurity certification. That makes you, you're learning the new skills. You're adapting to where these companies are actually investing in. So that might be something. I've also heard, you mentioned LinkedIn. I mean, I've heard LinkedIn is turning into a dating app now, unfortunately. I mean, like there's like people there trying to get some action on there. They're not necessarily looking for a job anymore because they're deleting the dating apps because the dating apps are cluttered with bots and all this spam and all this stuff too. And now they've gone to LinkedIn. So that's cluttering LinkedIn too.
Yeah, it's a bit of a mess. It used to just kind of be like a guru central, and now it's just it feels like Facebook some days, which is not beneficial if you're actually looking for a job. Jobs have changed, and we have to
It's
just
so
change our
spammy.
mentality.
LinkedIn is so
Hmm.
spammy too. It feels like someone just copied and pasted and sent like the same email to hundreds, if not thousands of people.
Yeah, and every post is written by AI. You can spot it a mile away. It's like, why do I want to read this? You're all the same. And yeah, I'm not a fan, as you can tell.
Yep. So it sounds like there's not a lot of industries right now that are hiring six-figure job. There is one. We've discussed this over the last couple weeks since I've gotten to know you a little bit. The commodities. So not oil and natural gas, but the other commodities. So that's where the investment capital, because you've had high commodity prices. The U.S. is adapting what strategic metals for copper and rare earth elements. So those, but then you need to go and get a geology degree. You need to get become a geologist, or you need to get into one of the rare earths professions there that is involved in refining rare earths. So those types of jobs, those actually look good because there's going to be less trading and free markets there. A lot of these countries like the U.S. and China, they're setting up their own domestic supply of key metals.
Yeah. There's a lot in that field, and I would say anything within the commodities like that are really good. Anything in defense and aerospace, you're strong. You're strong. None of that's going anywhere. Whether it's rare earths or metals or space, it's all there. It ain't
Well,
going anywhere.
Well, good point for military and defense spending because what the average person is maybe not think about is artificial intelligence software. The more it improves, the more it goes into humanoid robots and drones and things like that. So the more the software improves, the more they're going to invest it and put it into other military weapons and upgrades.
Definitely. Yeah, there's always industry in that. And, gosh, you can even just be like, materials engineer and go into aerospace and defense and things like that. So there's so many things you can do with a lot of different degrees that are out there. You have to think outside the box these days and really focus on, personally, what do you really like to do and how does that fit a certain industry, and then go after those companies. That
Well, I don't know if
really
pursuing
helps.
your passion is a good long-term financial strategy, Amanda. I'm
It's
for career
it's
path.
it's not about a passion. It's more about what are you really good at. Some people just don't realize that, and they just go, "Well, this is my degree. This is what I have to do. This is what the job description is." And so my first questions, and again, this is how I've helped so many people over, figure out their career path and just go over the years. What is it that you're really good at, and what is it that you're really good at that you don't ever want to do again? And figure out what those things are. There's going to be common threads. And now you need to see where those fit in to go after those certain industries on where their pain points are and go plug in what you're good at. And it's not necessarily that you should be passionate about it, because I don't believe you should have passion about your job. I really just don't. You should go where there's money and where they're hiring. Yes, but you do have to actually like it, or you're going to get burnout and you're going to hate it, and you're going to be back at square one faster than you can imagine. And we don't want that at all. So, really look at those things, but really, really, really think outside the box. There's so many avenues that people can go down, no matter what industry they have, what degree they have. There's so many jobs. You just got to think outside the box. Look at adjacent companies as well, adjacent industries, and see where you can fit.
I'll add one, especially if you can take this artificial intelligence software, whether it's the regular learning language model or the video stuff from Google VO3, and you can help a business in another industry, not computer programming, in another industry. You can help them improve their marketing. You can help them reduce their overhead. You can improve their profit margins. If you can solve that, you can make a career, or at least like a decent job for yourself.
Exactly. Exactly. You've got to think outside the box these days. Companies are not there for you. You got to be out there for yourself. Trust your gut and go after what you know.
So as we wrap up here, please tell my listeners about your newsletter. Don't you have a free sample for my newsletter? My listeners who want to check it out, you have the first month of the newsletter for free, or one copy of the newsletter.
Yeah, absolutely. They can reach out to me and I can get them on there. I have a Substack. It's Insider Edge Report, and I basically try to put out about 2 to 4, sometimes 5 pieces a week, just depending on what's going on. And so that's a good start. And then so you can find that at, like I said, insideredgereport.com. And then also, if you're looking for any kind of workforce intelligence, come to thejobchick.com, and that's where I do all my consulting and things like that, and the straight up reports for investors and companies. And if you just want to know what's going on and see what I do on a daily basis, check out my ex at the Job Chick.